Good morning, everyone. I am here again before you, and today we'll be discussing the second method of calculation of national income, and that is the income distribution method. We already understand. We already understand that the calculation of national income can be done through different, methods. There are total three methods. The first one is value-added method, also known as production method, which we did last time. Then is the income distribution method, because firstly the income is generated, so the national income can be found at that stage only by a value added method, where when the income is being generated, when the income is being earned in the firms, so there it can be found. If it is not found there, then you have the alternate method to calculate national income at this stage of the income distribution, because the income which has been generated in the income generation phase has to be distributed among the factors of production, because the factors of production have contributed towards the production, and without their contribution the production would have not been possible. So it is assumed that if there are no leakages and injections, then in that case whatever income has been generated, the same will be distributed also. So at the distribution stage also we can find out what is the value of the national income. So let us see this particular slide, gives us a formula about NDPFC. NDPFC, which is a short of net domestic product at factor cost. It is saying that it is a sum of three specific components. The first component which is being shown in this slide is the compensation of employees. We'll be discussing about these components in detail. We'll be knowing what all used to come under this particular head and what is the reason behind that. Second component shown here in the slide is operating surplus, and then you have mixed income of self-employed. So let us move to the next heads. You can see here, if you talk about the national income, then the national income can be calculated through income distribution method by adding the four different components. Remember, the previous slide was about NDPFC, and NDPFC is a domestic income. It is a income in the domestic territory, and national income is the domestic income, and also the income which we are receiving, the income which the residents are earning from rest of the world, from abroad. So that way there are four components to be included in this. The first one is the compensation of employees, second one will be the operating surplus, then you have mixed income of self-employed, and then you have net factor income from abroad. So these are the four components. If you are able to add them, four components, then you directly get national income. That's an NPFC. Okay, like I said, the individual components will be discussed in detail, and we'll be learning what all used to come in under this particular head. So firstly, the heading of this slide, which is saying compensation of employees, which is also known as emoluments of employees. See, what is the definition of this? The definition says that it is the total remuneration paid in cash and in kind, and in the form of social security contribution by employers to the employees in lieu of the work done by them during an accounting period. Any basically, compensation of employees will be all type of remunerations which are being paid by the employer to the employee. And why the employer is paying to the employee? Because the employees have done some work, employees have contributed towards the production process, so they are due to be rewarded, they are due to be paid some amount of money, and that can be in the form of cash. When you talk about wages in cash, then you know that the people get monthly income, they get weekly payment also, they get daily payment also. So in some of the cases we find that the people are getting hourly also. So each and every type of payment which is being done in cash, and this also include the allowances which are given up to the employees, like house rent allowance is given up, dearness allowance is being given up, traveling allowance is also being given up. It can be also in the form of all the bonuses which are being paid by the people to the employees, tips, commissions also come under this particular category. So whether it is a regular salary, basic salary, or it is any kind of allowances, HRA, DA, TA, medical allowance, so all allowances which are being paid in cash, of course in cash, and any type of commission, bonus, tips, which is being paid now. This payment, whether it is monthly payment, it is hourly payment, it is annually payment, it is bi-monthly payment, in whichever form, in one financial year, whatever amount of money has been received by the employees for the work they have rendered, for the contribution they have rendered to the production unit, that has to come under the compensation of employees. In short, we call it COE. See, other than this, the second component of the COE, which this slide is saying, wages and salaries in kind. Yes, it is not that the people get only the cash. There are some facilities which are also provided by the employer to the employees. It can be rent-free accommodation. In many cases, we find that the production unit or the employer used to have housing facilities for the employees. Whoever is appointed, he is also allotted the some kind of quarters or the houses, and for which no rent is taken from the people. So that rent free accommodation, the value of the rent which otherwise the employee had to pay in the open market, has to be counted. Sometimes the interest free loan is being given up to the employees by the employer, so the imputed interest also has to be counted. It can be vehicle for the personal use, it can be recreation or holidaying facility. Sometimes the medical expenses are also borne by the employer with respect to the employees. So all the expenses on the health issues which are being paid by the employer to the employee, that also has to be counted. If there are some payments being made for the education of the children, so that also has to be counted. So all that comes under the category of the wages in kind. So just in case in the numerical you find wages and salaries in cash and in kind separately, then it is advised that you should take both of them. However, if it is said wages and salaries full stop, I mean it is not mentioned whether wages in cash or wages in kind, then it will be assumed that the wages and salaries are including both type of wages. So that has to be there. You have to take care of this particular point. After that is the third important component of the compensation of employees, and that is employers contribution to social security scheme. See, there are certain social security schemes like pension, like provident fund. So these social security schemes provide the security, financial security, to the people who, when they get retired. So because when the people get retired, then at the time of the retirement they lose their source of earning. So there will be a problem before them for earning their livelihood for rest of the life. So in order to provide them some kind of safety against those risks of the social insecurity, the government has floated certain schemes in the name of pension, in the name of provident fund, in the name of insurances. Various insurances are there, and towards these scheme, what happens is that like for example, if I talk about the provident fund, when the people work in the organization, then every month certain amount of money, certain nominal amount of money is deducted from their salary, and it is credited into the provident fund account of the concerned employee. And the similar amount is also contributed by the employer himself. Like for example, somebody gets a salary of 10,000 rupees per month, 1,000 rupees is deducted in the name of provident fund. Another 1,000 is added by the employer also. So into the account of the into the provident fund account of the concerned employee, 2,000 rupees 2,000 rupees are going every month into that. And this is continued every month, and this is continued throughout the tenure of the job. And when the person gets retired, then this particular amount of money becomes a big amount, and at the time of retirement, that amount is given up to the employee, so that he can manage his expenses post retirement. So these schemes are called social security schemes. Now, for this social security scheme, there are two people who are contributing. One is the employee himself, because from his salary 1,000 rupees, like I said, is deducted every month. 1,000, another 1,000 is also contributed by the employer, so that becomes total 2,000 rupees. So when you calculate compensation of employees, then you also have to consider what has been contributed by the employer, like the salary on which there was an agreement between the employer and the employee is 10,000, but when he is paid 9,000 only. 1000 rupees have been credited into his account after deducting it from the salary, and another 1000 rupees employer has paid. So total amount of money which has gone from the pocket of the employer will be 11,000 rupees. So if you calculate the compensation of employees in totality, it will not be just what has been given up in cash. Actually 2000 rupees also have been credited into the account of the employee only, so that also belongs to the employee. So the total amount of money which the person has got in 1 month, as a matter of fact, will be 11,000 rupees, not 10,000. One point which has to be taken care by the students in this numerical will be, when you are calculating compensation of employees, then you have to consider the wages and salaries. Along with that, only the employer's contribution towards social security has to be considered. Sometimes, to confuse the children, to confuse the examinees, the employee's contribution is also given up, so that employee's contribution is not to be considered. Only the employer's contribution towards social security scheme has to be taken up. Well, right, we now move to the next component of the national income and NPFC and NDPFC, and that is operating surplus. Now the operating surplus, you can see in the slide, it is also a sum of 4 different components. So sometimes the operating surplus as a one head is given up in the numerical, then there is no problem, you can take that particular head directly. Otherwise you have to look into the components. So the components will be rent, interest, profit and royalty. These are the 4 components of the operating surplus. We will go into the detail of these components. We'll be learning the definitions also. So firstly I will talk about the rent. See, in our day-to-day life also this particular term is used, and we always think that somebody has hired a shop of some other person, and he is paying rent every month. Somebody has also hired a house for himself, and he is because he doesn't own the house, the person does not own the house, so he has taken somebody else's house in which he is living, his family is living, and every month he is paying rent to the landlord. So the definition of the rent says that this is the amount payable by the tenant to the landlord. Tenant is the one who is occupying other's house, and the landlord is the owner of the house. So the amount which is paid by the tenant to the landlord for the use of land, for the, mind you, for the use of land in the production process. So I have taken up 2 examples. One person is hired the shop, and he is paying rent to the owner of the shop. Other person has also hired a complete house, say 2 BHK house, 3 BHK house, and he is also paying rent. Definition says that the rent which is paid by the shopkeeper has to be considered. So that means if you have hired a house for not for the business purpose, just for accommodation purpose, then that is not to be counted. So the rent which is paid by the production unit always has to be counted. This particular point has to be taken care of. Okay. Now I come directly to the 4th component. You can see in this slide, though it is given up at the 4th point, but it is relevant here to discuss it along with rent, royalty. See the definition of rent, I repeat: the amount payable by the tenant to the landlord for the use of land for the production purpose. And royalty is the amount of money which is paid by the tenant to the landlord again. So this is similar to rent. In some way it is similar, and in the other way it is different also. So the amount of money which is paid by the tenant to the lord for exploiting subsoil assets. Why the rent was being paid? Because the tenant was using the premises, the tenant was using the shop for the production purpose. And why royalty is being paid? Because the tenant is exploiting the subsoil assets. He is taking out, he is going on digging the soil and taking out all the things which are there below the soil, and is taking away those assets. So the subsoil assets are being exploited by the tenant. So the amount of money which will be paid for this particular purpose will be the royalty. So basically there is one point of similarity in both of the cases: payment by tenant to the landlord. And in the other point of difference is, in case of rent it is the use of land only, and in case of royalty it is the extraction of the subsoil assets from the land. Well, we move to the next component of the operating surplus now. It is interest. See, the interest is the amount of money which is paid by the borrower to the lender. The borrower is the one who has borrowed the money, and lender is the one who has given the capital See, so the amount of money which is paid by the borrower to the lender for the use of capital in the production. So again, this is an important point to take care. It means that the loans which are being taken up by the production units, and the production units are paying interest to the lenders, only those interests have to be paid. So just in case somebody has taken up a loan for the house construction, building loan has been taken up, house loan has been taken up by the, of course, household, so and he's paying interest to the bank, then that is not to be considered in this. So it is only for the production purpose, right? Then we come to the last component of the operating surplus, which is the profit. See, the profit is the amount of money which is payable to the owner of the production unit for his enterprising abilities. Why the owner of the business unit? See, we understand why wages, because somebody has worked. Why interest? Because the capital has been provided. Why rent? Because the land has been provided. But somebody is sitting outside, somebody outside of the production unit at home, he is watching his favorite programs on TV, serials on TV, and still he is claiming for the profit. Why is he claiming for the profit, and why should he be paid profit? You cannot say that the person who is the owner of the production unit did nothing for the production. He has also played a very, very important role. And what role did he play? Firstly, he organized, he has arranged the factors of production from different, quarters, from different areas. He has arranged land, labor, capital, and then he has organized them, and he has been supervising it. So that capability is known as enterprising ability. So if that ability was not used, then this production would have not been possible. See, workers have to be workers, capital and land all has been brought together at one place, and this has been done by the owner only. So for that contribution, he has to be paid profit. However, this profit has actually three components in it: undistributed profit, corporation taxes, and dividends. Actually, whatever profit is earned, that profit is subject to the taxation on the part of the government, which is known as the corporation tax. So that has to be paid out of profit only. Plus some amount of money is retained by the production unit for future emergencies. So that is known as undistributed profit or retained earning of the corporations. And remaining amount of money, which is called dividend, is due to be paid to the owner if he is sole proprietor. If he is partners, then it has to be distributed among the partners. If there are shareholders, then it has to be paid among the shareholders according to their investment. I hope you have understood this perfectly. So operating surplus will be a sum of rent, interest, profit, and royalty. Just in case profit is not given up as full, then undistributed profit, corporation taxes, and dividends have to be taken into consideration. So this particular slide, again, you can read. It talks about all what I have just discussed with you. This is regarding compensation of employees, and this is about the operating surplus. We move to the next slide now, and then comes the third component of the national income, which is mixed income. Mixed income of self-employed. Actually, there are some people. Actually speaking, there are two sources of income. One is the income from work, and another is the income from the property. Like income from work is compensation of employees, and income from property is operating surplus. But there are certain incomes to the people in which there is a mixture of both of them. I mean, they are the owners of the production unit, and also they themselves are working. So their income cannot be separated, or it cannot be clearly declared as income from work or income from property. Like some example have been given: a farmer, he is the owner of land and also he is working in the farm. Barber, he is the owner of the shop and also he is working. So all the retail shopkeepers, small shopkeepers, professionals like doctors, some doctor has opened up a clinic in some area, so he is the owner of his clinic, and also he himself is treating the patient. So his income to be kept where? Will it be a COE or will it be operating surplus? So there is a kind of confusion in this. So to remove that confusion, one separate category of income has been created by the economists, and that is known as mixed income of self-employed. So that also has to be considered. So far we have discussed about three components of national income. That's compensation of employees, operating surplus, and mixed income. When you add these three, actually you get NDPFC, because this is the income which has been generated in the domestic territory. to which if you add NFIA, net factor income from abroad, so naturally is this domestic income becomes national income. So NNPFC will be equals to NDPFC plus NFIA. So in short, I can say if you are calculating national income by income method, then there are 4 different components which you should directly add. That's COE, OS, MI, and NFIA. Right. Here is an example which I'll be discussing with you. Question says find out GNPMP. See, the first thing I will always advise you to take care is which particular head has been asked in the numerical. It is not always national income, let me tell you. When you say national income, you mean NNPFC. So firstly, you should consider which head is being asked in the national income accounting. So here in this question, it is saying GNPMP. So when you say GNPMP, you should take care. Gross income is there, it means depreciation has to be there, and it is market price, so NIT also has to be there other than NNPFC. Okay. So rent, interest, dividend, undistributed profit, corporation taxes, COE, consumption of fixed capital, which is depreciation, NIT, and net factor income from abroad. So I'll advise you here to firstly write down the formula for the calculation of GNPMP, which will be I tell you COE, OS, MI, NFYA, DEP, and NIT. So COE has been given up as one head, so 400 is there. As far as operating surplus is there, it is not given up in full, so you have to make a mix, a combine of it. So put up a bracket in which write down rent, interest, royalty is not there, so to be taken up as 0, but the 3 components of profit have been given up. That's undistributed profit, corporation taxes, and dividends. After that, we also do not find mixed income here, so mixed income if not there, still you have to write down that in the formula and the value to be taken up as 0, with which -10, which is net factor income from abroad, to be taken up, and you will be able to get NNPFC, but with which you have to consider the NIT and depreciation to make GNPMP. Let us see how they have calculated this. You can see firstly COE to be taken up as full, OS is separately being counted. So OS calculated as 110, and then because mixed income is not there, so NDP FC has been counted as 400 plus 110 plus 0, that's 510. Then depreciation and NIT have been added, and then the answer is 560 crores of rupees. You can see this slide carefully. So GNPMP, there will be total 6 elements in it. If it is NNPFC, there will be 4 elements in this. Well, here it is about the national income. National income basically means NNPFC. So you can see here wages and salaries 500. So COE has not been given up. If COE is not there, then you should see wages and salaries and employers' contribution to social security scheme. In this question, only wages and salaries have been given up. So in COE, you have to take employer contribution as 0. After that, you have the rent, interest is there, royalty is there, profit is profit after tax is there. Then you have profit after tax means the profit is not including corporation tax in it. So the total profit will be actually 100 plus 20, 100 plus 20, that's 120. Subsidies and indirect taxes have been taken up separately, so you have to use them as IT minus S, and then you have net factor income from abroad. Let us see how the calculation has been done. COE 500, operating surplus I just said, you can see for yourself. Profit will be profit after tax and corporation tax together. Actually this has to be only profit. If it is profit, it means it is complete profit, because the profit has 3 components, UP, CT, and DIP. So CT has been taken up separately. Please take care, if the question, for example, had this been like profit and the corporation tax, then the profit had to be taken up and corporation tax had to be ignored. So that way operating surplus has been counted, and then you have calculated NDPFC, with which you have also added an NFYA, that's -5, so 725. It is another example which has been given up here. Mixed income as one head, old age pension 20, dividends 100, operating surplus 900, wages and salaries 500, profits 400, employers contribution to social security schemes 50, NFYA -10, depreciation 50, NIT 50. Okay, firstly I'll talk about COE. COE wages and salaries have been given up there. Then you also have the employer's contribution to social security schemes. Along with that, to confuse the children, old age pension has been given up. Old age pension actually not to be taken up anywhere, because old age pension is a transfer income, so to be ignored. So COE will be the sum of head number 5 and head number 7. After that is the operating surplus. In the operating surplus, you can take dividends. You can take profits, and I do not see rent, interest, royalty here. So only profit has to be taken up. Then you have to take mixed income, which is 200. You get NDPFC, with which you can subtract my 10, because NFY is minus 10. So that gives you the national income. Let us see how the calculation has been done. NDPFC equals to COE OSMI, wages and salaries. So the same thing you can see. Employer contribution and wages both have been added. Operating surplus is 900 and MI is 200. NDPFC is 550 plus 900 plus 200, that's 1650. And NFYA when added, because it is negative, so 10 is subtracted, it's 1640 crores. This is about calculation of national income, rent, interest, profit, taxes on profits. Taxes on profits, I tell you, has been given up just to confuse the child, because the profits are there, so it is complete profit. Employer contribution, and then yes, another confusion in this, employer contribution, mixed income, NIT, employees contribution to social security scheme, and compensation of employees. See, if compensation of employees is there, say everything is there. Wages and salaries and employer contribution, employees contribution to be ignored. Yes, if wages were given up, then employer contribution had to be taken up, because in this COE itself has been given up. So remaining two heads have been given up just to confuse the examinees. So this is the confusion which has been created actually in this question in the COE. I hope this is clear. I need not spend much time on this. You can see the calculation of numerical. NDPFC is equal to COE OSMI. COE 500, OS is calculated as 390, MI is 250, and then calculation of NNPFC. I hope you have seen this. Well, we move to the next. These are different types of questions in which you get an idea about all confusions which are created. COE in full has been given up, so there is no problem. Along with COE in head number 6, employer contribution is also being given up. So why to take it? Because it is already there in COE. Then you have rent, interest, profit, dividend is there. And now in this also, if profits are there, there is no need of using dividend, so dividend has to be ignored. Mixed income, self-employed, 500, and direct tax has been given up. Remember, in the calculation of national income, only the indirect taxes have significance. Direct taxes have no role to play in this, because direct tax is actually a part of the national income. And then you have an FYA. So you can see for yourself now. Calculation of operating surplus, rent, profit, rent, interest only. Mixed income is given up as one head, so NDPFC is the sum of these three, and then you have an NPFC after adding NFYA, which is negative, so 50 is being subtracted. I hope this is clear. Okay, let us see what is there in this question. COE has been given up as one head, rent, profit, interest, so these three will give you the operating surplus. And depreciation is there in the form of consumption of fixed capital. NIT is there, NFI is there, change in stock is there. So there is no role of change in stock, because change in stock is used in value added method. So mixed income. So in this question, actually change in stock only may create confusion for the children. The rest of the question is very simple. You can see NDPFC, COE OSMI, COE 100, operating surplus is 40, MI 110. So NDPFC will be 250, sum of these three items. Then depreciation and NIT has to be added, because actually you are calculating GNPMP. Now this is another question in which GNPMP has to be found. So rent, interest, profit, Dividend has been given up to confuse the children, because profit is already including dividend. So rent, interest and profit will give you OS. You have COE also. Along with COE, wages and salaries have been given up to confuse you. So only COE to be taken up, wages and salaries to be ignored. Mixed income is there as one head, so there is nothing difficult in this question. You can see the calculation of this. OS is the sum of rent, interest and profit. Mixed income is 100. NDPFC is the sum of these three. Then GNPMP is being found through adding NFY, depreciation, NIT and NFY. Right. This is GDPMP to be found, GDPMP. So mixed income, COE. Then you have the in head number 8, I can see rent, interest and profit has been given up. So this is nothing but operating surplus. Interest on national debt, head number 9, it is actually transfer in payment, so not to be considered at all. GDPMP. So other than NFYA, you can see in the calculation, other than NFYA, each and everything has been taken up in this. COE 250, operating surplus 100, mixed income 280. So directly NDPFC can be found, which is sum of these three, 620. And this NDPFC, if you have to make GDPFC, you have to add depreciation. So and NIT, if you add, it becomes GDPMP. I hope this is understood, right? Well, we are about to be towards the end of this particular chapter. Like I said, in every method of the national income accounting, calculation of national income, there will be three types of questions. Firstly, the definitions of the related method. Like today we discussed about the definition of COE, definition of the operating surplus, definition of the mixed income. We also discussed about their components and definition of individual components, like definition of rent, interest, profit, definition of wages and salaries, cash in kind and employer contribution. Each and everything has been done in detail. Now when calculating national income by any method, there are certain precautions which we always have to take. So here also we have certain precautions. The first precaution is that when you are calculating national income by income method, so actually you are considering the income of the people. So if there is any transfer income, any income which is by unilateral income in the form of wages, in the form of donation, gift, charity, old age pension, widow pension, scholarships, awards, any kind of charity donation, it is always transfer income. So if anybody is earning incomes in these heads, not to be considered. Just one point, that's the confusion regarding the pension. If it is old age pension applicable to the old people, widow pension applicable to the widows, and if it is plain pension, so plain pension has to be counted in the COE. Reason being, the pension is paid to the people who have worked in certain organization for certain number of years. So for to be eligible for that particular pension, one has actually worked. So you cannot say that this is a unilateral income, this is bilateral. Towards that particular income in the form of pension, one had worked for quite a long time in the organization. That is why he has become eligible for that pension. So remember, plain pension not to be taken up, plain pension to be taken up in the calculation, and old age pension, widow pension not to be considered. Okay. Number 2 is, if somebody is getting income through illegal activities like kidnapping, ransom amount or gambling, those incomes not to be taken up. However, income through smuggling has to be considered according to the decision of the United Nations in 2007. Then is the third one, income earned through selling second-hand goods should not be included. Remember last time also in the evaluated method we had said, because there we consider the sales. So if somebody is selling second-hand car, so the value of sale not to be counted. If somebody is selling a second-hand car and he is earning some amount of money in that, so that earning also not to be counted. However, the income which the dealer of the old cars, I mean the commission agents, their commission will be counted, and that will come under the head of the COE. After that is the income earned from leisure time activities should not be included. The income earned by selling shares and debentures, yes, these are the financial assets. So any income which is being earned through sale and purchase of the financial asset like shares and debentures, that is not to be counted. However, if there are some commission agents who are into the business of sale and purchase of the shares and debentures, their income as commission to be counted under the compensation of employees. That is all for today. I hope you have understood all aspects of the calculation of national income by income method. Thank you so much for being patient.